Hello everyone, Paul here from the Pen Academy. So in this particular video, we're going to be talking about a couple of synthetic indices. So probably you're watching this video because you think maybe synthetic indices need a particular strategy or need a specific way to trade. No, as long as you've been watching our channel, or if it's your first time, just watch some of the lessons that we do put up across our channel. You'll see that the topics are actually trade across everything, whether you want to trade cryptos, synthetics, or the currencies market or the commodities market. You can do the same things. It's the same thing we're going to be implementing here, and then you can see how you can actually trade synthetic indices with ease using the same principles, the same rules, and the same topics that we have taught on the channel. If it's your first time, make sure you subscribe because we have a lot of important things that can help you to speed up your process to consistency as a trader. So as usual, we start from the monthly time frame. But before I start from the monthly time frame, we last talked about V100 here, and we said we expected it to push down, which is exactly what the market is doing currently. So let's just give ourselves a reminder a little bit. When you come to the monthly time frame, we spoke about a level that needs to be tested because when the market broke it, it wasn't tested properly. You see this area here? The market gave us a resistance area here, a resistance here, a resistance here. The market broke above. So instead of coming to retest it, the market gave us a false breakout here and the market pushed up. So when the market pushed up, it left this area here untested. So someone may be saying, but it was tested maybe in the smaller time frames. So we need the market to be tested or a certain area or level to be tested in the specific area, right? So this area here needs to be tested. And you can see we still have a distance between it, between the line and where the price is. So meaning we expect the price to come down, right, to test it. So what rule are we implementing? Are we implementing the rule of false breakouts? We have it on our channel here. Make sure you see how you can trade false breakouts. How do you use it? When the market breaks above, and then the rule is that we need a weekly test. But when the market comes back with an aggressive pressure and breaks back down, this makes this area here a false breakout. So what do you want to see? We want to see the market coming to retest this point here, which is exactly what is happening. The market broke down and again broke up. So we need the market to come and test this area here so that it can give us the reversal that we were looking for. Why are we looking for a reversal? Just to remind you is that the market gave us this impulsive move downwards from up there up to down here, and we need the market to come and test this area here. Sorry, let me just delete this. We need the market to come and test this area here. I'll just draw it again from up there up to down here. So I'll just bring my horizontal line and put it here. You can mark all these Fibonacci retracement levels. Which topic am I talking about here? We're talking about the Fibonacci retracement tool. So far we have implemented two topics. The false breakout, which is giving us our target downwards, and then the Fibonacci retracement tool. After this impulsive move happening, we need the market to give us a pullback, right? So that's the second topic of Fibonacci retracement tool. So we've already gotten our target, and our target is giving us a confluence of a resistance here and also a false breakout. So we need also this area to be tested. Of course, along the way, we shall have some turning points that will be acting as other targets, but currently we have gotten our direction. We need the market to push down, then pushes upwards. Now, when we go down to the weekly time frame, what do we observe? We can clearly observe that the market has already touched this area before we can start pushing up. So when you come to the weekly time frame, we shall just go to line chart so that we can mark the previous turning points that the market had created. We have this turning point here, right? I'll just change the color to, let's use red. I'll just change to red. And also we have this other turning point that the market had created here so that we can see properly. So when we go back to the candlestick chart, you can clearly see that the market was breaking while retesting, breaking while retesting. So the market is still pushing down to reach this blue level here. The blue color we marked in monthly to give us the direction. Then when we come down to the daily time frame, now I think it makes even much more sense. I'll just delete this because we're trading it. Now in daily, we clearly observe we had an M here. After an M is created, what are the rules? If you've been following the channel, you can just comment there. What are the rules? Let me give you like 3 seconds. What are the rules? Or you can just answer yourself. When the market creates an M and breaks this neckline, we expect the market to come and retest the neckline. When it retests the neckline, then it can give us double bottoms, or it can give us a new low, or it can give us a higher low. So this is exactly what the market did here. It gave us an M here. Then it came and gave us a retracement to the neckline. And in the process of giving us the retracement to the neckline, it again gave us another M here. So the market currently has given us an M. There's a higher chance the market would give us a pullback before continuing downwards. Are we together? But in case the pullback does not come immediately, because the distance to this blue line is still there, if the pullback does not come immediately and gives us an impulse downwards, then we could use these turning points here where the market could confluence with the Fibonacci retracement tool. Then on a retracement, then we can look for sales. Let me just repeat that. Either the market is going to give us a pullback to this level here, then continues down, right? Either the market is going to give us a pullback to this area here and then continues down, or the market will give us a continuation down to give us an impulse so that we can use a Fibonacci here, breaking this turning point and this turning point, which will be acting as resistance. So on a weekly retracement here, then we can finish this move. Upon finishing this move, then we shall look for change of trend to start our long-term swing buy on V100. So this is how we do breakdowns using the same things we have taught you here on this channel here. So if in case you've not been watching them, make sure you can go through and you learn something, one or two. Even if you go to the next lower time frames, still the market is moving in this exact levels that we have done what we have marked. You can clearly observe these are the areas that we've been talking about: M's created, neckline tested, and all that. So currently you can see that the market is making low, equal highs here, low, lower high, equal lows so far, but also in the process it's giving us mini lower low, lower high, lower low, lower high, lower low. This area here is not, it has not been tested properly. So the market has broken it and created a new low here. And currently it has tested it to continue pushing down, right? So in case you would like to catch the continuation, you observe the lower time frames like this. For example, this area here, let me just mark it for you. This area here would have been a good one for you if in case you do intraday to be retested, because it's confluencing properly with this structure here. So it has tested it and it's pushing down. But if you have a small account, make sure you're trading at major levels that have been untested, so that you're trading from a fresh level. For example, this area here is fresh and not been tested. We also have this area here which is very fresh and not been tested. So let me just mark it actually for you guys. We have this area here, very fresh. The market broke down, broke up, never tested it. So you can, if you have a small account, you can take a trade from there. Another opportunity to take a trade from can be this level here, because the market has not tested it. So if you have a big account, you can take trades from where the market is, because it also tested the level. But if you have a small account, make sure you take trades from these levels here to continue down here. Are we together? So that is it for V100, and you can clearly see I've implemented the same things. Now let's take a look at another example, which is V25. Now we have been trading this V25 with the members in the private community, and we had an entry here, but currently it has done something that we could be also using it to our advantage. So I'll just delete this so that we can also look at it. I'll delete this, I'll delete this, I'll delete this, and I'll also delete this. So as usual, when you start from the monthly time frame, I'll also delete this. What do we see in the monthly time frame? In the monthly time frame, we can clearly see that the market created a low, lower high, right? Came tested this area here and then broke below this area, which was previously not tested properly here. Now currently the market has tested it. Also in the process, the market created a W. Now currently we have to come back and test this area here, right? So after W has been created, what do we expect? We expect to test this area and then maybe give us a lower high, or give us equal tops, or even a higher high. But in this case, you can clearly see we're in a downtrend, right? So what do you expect? What I expect is the market to give me a retest here, comes back down. Since we have a W here, it will react a bit to give me a lower high and then pushes down. But this all will be determined by the structures in the next lower time frame. So we have gotten our direction. What next do we want? So I'm just going to go to line chart to clearly mark my level here that I want the market to test, that level. So I'll go back to candlestick chart. Then let's go down to the weekly time frame and observe what we see in weekly. Now in weekly, we can clearly observe that the market touched this area here and reacted and gave us something like this. It's creating an M, but it's not yet an M because we are still here. Remember, we said a neckline has to be broken if it is to be an M. So we need the market to break below. If the market can break below, that's when we shall be having an M in this case, right? This M here. It's not yet an M because the market can reverse from here and then pushes. Remember, this is a very strong level, even in monthly. It can easily become a W, right? So want them, if the weekly can close below, we still have to close the week, then we shall be having an M. And after an M is created, what we want a retest upwards, which we talked about in monthly, that we're talking about that if the market can come down and gives us a lower high. Now this lower high will be created by this M here. If it breaks below, we shall come up here, get a lower high, then either we can continue down or it can continue upwards, right? So currently we're at support, but for our agenda to be achieved, we need the market to break below so that we have an M. Now, when we go down to the daily time frame, what do we observe? Now, in daily, we have been, those who trade using trend lines, we have a market that actually broke a trend line. We have a trend line here. Excuse me, let me just delete this. We have a trend line that the market broke here. You can see the market was making higher highs, higher lows, higher highs. So there's a trend line here that the market broke, right? So that is one, to give you the push down. Then two, also currently you can clearly see that we're having lower low, lower high, lower low, lower high, lower low. The market attempted to break above, but we have again broken back down, meaning the downtrend is still on. So which levels are we actually interested in to continue taking the trades? Like I showed you, we already took this sell, but currently what we observe that the market broke above this level here, right, to attempt that has changed trend, but it actually then broke back down. Then also we have this untested area here. Let me just mark it for you here. We have this untested area here, so I'll just delete this. And I'll also delete this to make things very clear. So in case you have a small account and you're not yet in this trade, wait for the market to come back into this area here. Wait for the market to come back into this area, and then you can look for selling opportunities. But in case you have a big account, you can either wait, you can either look for a trade where it is, because this is a lower low, lower high, lower low here. Then you can look for sales, because even if it reverses, you have a big account, you can be able to hold, right? But if you have a small account, make sure you're taking trades at those virgin areas that are very, very, very fresh and have not been touched several times by price. In case you're trading synthetic indices, make sure you keep that in your mind. So small accounts, you can trade from here, or wait for the market to break this area so that we have an M in the weekly time frame, making this area very significant. Currently, it's significant, yes, but we need it to be broken. So when it is broken on a weekly test, then you can be able to look for trades to take the sell to continue down with it. Are we together? Because we shall be having, like we have a W in monthly, so we shall be having something like this. Cambridge tested, gave us a lower high, then broke down, which also is to be appearing in weekly. So after the retest, what do we expect? To continue downwards, because the direction overall is downwards, unless the market creates a double bottom. Then we can change trend. We shall all be updating on that, so that you can also learn how to identify how the market changes trend or how it continues. So this is how you do analysis on synthetic indices. I really hope if you're trading V25 and V100, it really helps you in your trading. Have a great time.